Joining us now to make sense of the market setup right now is Rahul Sharma, the Director and Head of Technical and Derivative Research of JM Financial Services. Thank you very much, Mr. Sharma, for joining us this afternoon on ET Now. First things first, what do you make of the market setup? It seems like the market's been gradually recovering, but a lot of volatility still persists.
Yeah, firstly, wishing you all a very happy Holi. So, markets are into that zone where the grind is essentially the base formation that we've spoken of in the past, and we feel that it could spend some more time in this broad range with 22,700, 22,800 as a very stiff resistance at the higher side, and 22,000, 21,800 being a very strong support equally on the downside. So we feel that this back and forth action is what is happening in the market as of now. There is lack of leadership. We saw metals doing well last week. Again, follow buying is not happening in this week. We saw private banks do well before that, but they have also taken a back seat. So from the sectoral perspective, none of the sectors are really sort of coming out of the woods and taking charge for the market to give a breakout from that 22,800 resistance area. So our reading is the market should continue to be damp like this for maybe a couple of weeks more. Maybe we could revisit the 21,800 area on the downside. And once that happens, from April onwards, we feel a structural recovery can begin in the market. So if you have a 2 to 3 month kind of a perspective, we think this is a time to accumulate stocks. This is a time to cherry pick the best of the setups and wait for the market to reverse in a meaningful way. So it's better to be an investor at these in this kind of a market than be a trader because markets are extremely choppy, whether it be on the long side or the short side. Markets are sort of triggering stop losses or rather not giving any directional move in whatsoever way. So essentially this is what we hold as a house view. Junior BC is one ETF which one can look to add, one can look to buy in this month. Overall, the ETF or the Nifty Next 50 is down by 25% from the peak. We feel that the risk reward is very favorable in this index, and one can participate in this index by buying the Junior Bs, which is an ETF. And we feel investors can get a blend of a lot of mid caps and a bit of large caps in this. So anywhere the market cap ranges from 50,000 crore to 4.5 lakh crore on the upside. So it's a very wide gamut of stocks in this basket. And once April kicks in, once Nifty comes out of the current consolidation range, individual stocks can then be preferred and gears can be changed. So net we expect March to be a dampener. April is where we are expecting the markets to come back into momentum.
Right, so brace yourself for some more volatility, at least for the next 2 weeks, and April is the month from where we can see some bit of a structural recovery. Hi Rahul, good afternoon. This is Shrishti also joining in. But give us a sense on the IT space, because that has been a laggard, of course, and what's been happening in US, some of the sentimental hit back home to some of these Indian IT names as well. And today as well, we are seeing all these stocks not doing that great. Do you believe that there could be some more pain in store for the IT counters in any of the weakest link that you're finding at this point in time?
Absolutely. So, seldom does it happen that NASDAQ as an index struggles and IT index does well domestically. So, it is deep rooted in the way US markets are shaping down over the last 2 to 3 weeks. And this is only this is expected to steepen as this is the first time probably where US markets may hit a lower low and a lower high in the last 3 to 4 months time frame. So IT as an index definitely remains under pressure. IT index, which has been defensive for a long while now, has actually seen a death crossover happening in today's session. It could be end of the day, we could see this confirmation. Essentially, death crossovers are where the 50-day EMA cuts the 200-day EMA on the daily charts. And we feel that there is more downside to be had in the IT index. So speaking of levels, 34,000 is where we expect the IT index to take the next support. So the next 1 month or so, we could see further grind happening in the IT index on the downside. What looks good to short in the IT index? So LTI Mindtree is our topic. We've advised clients to go short on this one around the 4,500 mark. We feel that the stock can slide downwards towards the 4,200 area. maybe even lower as well. It's kind of a falling knife as we speak, and overall IT stocks have been under pressure. So I think it's best to stick with these tier 2, tier 3 names where the volatility is high and essentially which have broken key support levels. So the top stock on the short side looks LTI Mindtree from the IT space, and overall IT as a sector continues to be under pressure, and any bounce back, if any, can be utilized as an exit opportunity, at least for the short to medium term.
Right, Rahul. And just to add to the pain that's being seen in the IT space, in fact, international brokerage Morgan Stanley has suggested that these macroeconomic shifts and technological changes, they do pose risks to the domestic IT sector as well. And that could really impact valuations and revenue growth in the sector. On that note, thank you very much for joining us and sharing your thoughts on the current market setup and the sectors that you're bullish on and seemingly interested in.
If you like this video, then like, share and subscribe to ET Now.